Everyone, welcome to another episode of Sitting Down with Matt and Mark to have your questions answered. That's right. Each and every week, we take questions that are asked on my primary channel, Mark Moss. As I'm doing those videos, I'm asking for people to ask questions about those videos. We're grabbing 2 questions from each video each week, and we're answering them over here on this channel. Now, when we answer your question on this video, you are able to earn $25 in Bitcoin just for asking the question. We love the questions. We love to answer them over here. The catch is that you have to ask them on the original Mark Moss channel, and you have to be watching these videos to see your question asked or answered, and then let us know down below. Just send us a comment and we'll go ahead and hook you up. So anyway, with that, let's go ahead and just jump right into it.
All right, Mark. So I scavenged through your comments and I managed to pick out some of the best questions on the economic revolution on your main channel, Mark Moss. Now, one of the questions that I want to dive into, especially with the mania of this crypto fiasco going on and everybody's looking for the next coin, looking for the next thing. And my personal self has gotten hundreds of questions. Hey, what do you think about SafeMoon? Hey, what do you think about Doge? And all these things. We talked about it a little bit earlier. So I figured it'd be great to just go ahead and just get the answer out there, and so we have no more confusion. Now, this question is by Stuart Egglestone. I hope I said that right. So,
all right, Stuart.
Here's my question. Is it better to hedge your position in crypto by acquiring an assortment of altcoins to create a diversified portfolio, or would you pursue a single coin position, BTC, Ether, XRP, etc.? With all the volatility currently, which method and means would you go about choosing? So like we did discuss this earlier. Go ahead and let's go ahead and debunk all the altcoin myths and the infrastructure being built around Bitcoin.
Yeah. So, we did. And I could give you a really long answer. What I would say, Stuart, is first off, just on your strategy. So there's, a lot of times people get into, or most people get into investing hoping to get rich. I want to quit my job and be a full-time investor. So everyone's always planning for the upside, but most professional investors always want to manage for the downside. So obviously, what we hope for the upside, but we plan for the downside. And so there's risk management becomes very, 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 very important. I think Warren Buffett says the number one rule in investing is to never lose money. The second rule is don't forget number one. So you never want to lose money. And so you want to have proper risk management. Now, we manage risk really 3 ways. We manage risk, 1, through our allocation. So that means I wouldn't put all my money into cryptocurrencies. I might put some into cryptocurrencies and keep some in cash. So if I lost my crypto, I still have some cash. Or I might put some into cryptocurrencies and some into real estate and some in cash, some in real estate, gold, and cash. So I'm allocating my assets. That's the first way that we manage risk. The second way that we manage risk is through position sizes. And that's kind of what you're asking about right here, I think. So of what I've decided to allocate towards gold or towards stocks or towards cryptos, that's my allocation. But then I want to have diversified positions. And so instead of just buying one gold position, I might open up 5 or 10 gold miner positions. Instead of just buying one piece of real estate, I might own 2 or 3 pieces of real estate. So instead of owning one cryptocurrency, you could own 2 or 3. So I think that's what you're asking about, that diversified portfolio. Now, you're asking about, would it be better to have a single coin or diversify? So what I believe over a long enough period of time is that all of these coins are going to trend to zero. And so it kind of depends on you. I believe, and as Matt and I were kind of talking before we were recording, that if you go back and you study technological revolutions and technology cycles, you'll see that cycles repeat over and over and over, rhyme. If you watch my YouTube videos at all, you know that I always go back and pull parallels from history because it tells us so much. And so what we can see is that the way that new technologies are rolled out, it always kind of is the same way. And I'm going to give you just a super high level view on this. But if you go back and look at the automobiles 120 years ago, the automobile was created and there was no infrastructure. There was no market for that. So we had the automobile. Henry Ford came out with it and started pumping them out. Next thing you know, there was 50 automobile manufacturers, 50. But guess what? There was no market to support it, and there was no infrastructure. There was no roads to drive them on. There was no gas stations to fill them up on. There was no service centers to get them repaired. There was no aftermarket parts. And the roads were made for horses. So they were muddy and full of manure. You couldn't even drive them around. So guess what? With no infrastructure, no market to support it, 50 auto manufacturers, well, 47 of them went bankrupt. Chrysler, Ford, GM, lived on. Same thing happened in the dot-com boom. We had the dot-com boom happened, but all of a sudden, 98, 99, we had all these internet companies doing all kinds of things. Webvan.com, pets.com, they were famous ones. But guess what? There was no infrastructure to support that. Guess what? There was no market to support that. So what do I mean? Well, the infrastructure wasn't there. So the internet was very slow back then. It was very slow. It was very clunky. There was no supply chain management, no logistics for that. So the infrastructure wasn't there. Also, the market wasn't there. I believe by the year 2000, only I think less than 10% of people had bought anything online. So there was no market to support that either. And so guess what? All those companies went bankrupt. And I'm seeing the exact same thing happen in the blockchain space where we had Bitcoin, which is the revolution, the blockchain, Bitcoin blockchain. But now we have 8,000 cryptocurrencies that are all trying to solve these different things. And one are faster and one are cheaper and one are more private. And one does supply chain and one does this and one has smart contracts and all those things. The problem is, guess there's no infrastructure. There's no market to support that, right? So guess what's going to happen? They're all going away. And we're starting to see right now all of that's being built on Bitcoin. So that's kind of my big picture thesis. So should you pursue a single coin or should you get a whole bunch of coins? So I would say I think that it depends on you. So for me personally, the longer I've been in the space, the more I just like to buy Bitcoin. And so for the average person, I think they should just buy Bitcoin. Now, I understand that a lot of people like to go to Vegas and gamble. I have a lot of friends that like to bet on sports every weekend. I know people like to trade penny stocks. And if that's you and you like to gamble and you like to spend all day on TikTok and Reddit finding little pump groups and chasing pumps on these altcoins, and you think that's fun, I guess go ahead and do that. But I would just urge you to understand what it is that you're doing. You're having fun gambling and chasing pumps, and that's not really investing. So for your investing portfolio, I think you would be better off just buying Bitcoin. So anyway, I guess that's my big answer. Does that make sense, Matt? Did I leave anything out?
To that note, so many people say, what about this altcoin? Hey, do you think I should buy this? Do you think I should buy that? First and foremost, I always tell people, if you're looking to buy an altcoin and you don't even really know what it's about or whether it's being used and what the use case is for, one, you have no business being invested in those. Two, what is your time duration? If you're you're looking for a quick buck, then okay, you could, like you said, you could take a risk and you could take a gamble on the altcoins, but what is going to live long term? And we can already answer that. Bitcoin has been here the longest and it will continue to be here the longest. A flaw that I see with a lot of these altcoins is there's always a finger to point. So let's say, in the near future, crypto does get, which it will, a lot more traction and government don't like it, as we're aware of, and they want to point the finger. Well, they can't point it anywhere at Bitcoin. You could point it at XRP, you're going to point it right at Ripple, the company. You could point it at Ether. You could go look at Vitalik. You could look at all these altcoins and you're able to point the finger. With Bitcoin, where are you pointing the finger? You can't.
Yeah, that's a great point.
So to me, it's like they're all going to wean out and Bitcoin will be the longest and the safest bet for you.
Yeah, and it really depends on what you're trying to do also. So are you an investor? So Warren Buffett has said that if he could give new investors coming into the market at the beginning of their career any advice, what he would tell them is imagine you only have 20 moves in your whole career. He said that would be his number one advice. Imagine if all you have is 20 moves your whole career. So when Warren Buffett goes in, he buys Coca-Cola in 1965, he still owns that today. 80, 90 years later, he's still owning that. And so what investors are doing are looking for undervalued opportunities that provide asymmetric returns, and they hold them for a really long time to allow them to build into their value. All right. So that's what investors do. Now, today, fiat money has changed everybody's mindset, and everybody wants short-term gains, right? Everybody wants the magic pill. I don't want to work out and diet because that takes way too long. Can I get the magic pill? Right? That's what everybody wants today. And so what we've seen is we've seen the rise of trading, and people want to be day traders, and people want to quit their job, and they want to chase these pumps, and they want to pull money out of the market. And if that's you, I guess that's fine. Like I said, just understand what it is that you're doing. For me, I'd like to remind people that there's really three ways you need to focus on money, and you need to first. Most people focus on the second way, but they skip number one. So number one, the first thing you need to do is you need to focus on wealth creation. You need to go make money. Go make money. Investing is not about making money. You need to go provide goods, products, services to create wealth, to earn money. Then number two, you take that money and you invest it. That then takes your money and it increases the money. And then the third way is you have to worry about protecting your money. I don't want to get into that. But the problem is if I'm focusing on number two, which is investing my money, but I'm trying to day trade it and be in chat rooms all day and chase pumps, what I'm really doing is taking number two and trying to put it into number one, which is building wealth. And that's okay if that's what you want to do, if that's what you want to do as your job. But like I said, just understand clearly what it is that you're doing. For me, I'm focused on building massive value for as many people as I can. And so for me, I don't want my investing, I don't want to be trading a bunch of things that will never turn into anything. I'd rather put my money somewhere solid so I could focus on building something of great value for myself, my family, for other people. And so that's what I choose to do. That's what I would recommend. I think that as I've found, the very best investment ever is always going to be into yourself. It's always going to be into building your own business. So I would rather see people spend that time, effort, energy, creativity, building something out for them, and then take the money and invest it somewhere else. But that's a bigger conversation.
I mean, like Joey say, success leaves clues. And I've never seen, let's zoom out. Let's say you want to chase the day trading dream. Okay, well, look at all these day traders. What are they doing? They're creating cash flow. They're selling a product, they're creating a brand, and they're generating cash flow. They didn't just say, all right, I'm just going to be a day trader, and you never heard of them. No, you've heard of them because they're trying to create a brand.
Yeah.
They're trying to create
but even still, you can't name any, right? So Ray Dalio, Warren Buffett, Stanley Druckenmiller. I mean, Stanley Druckenmiller is a trader, maybe the best trader ever, but he trades like one position every couple of years. It's not like daily. So it's just a little bit of a different thing.
Yeah.
The other thing is that, people listening to this might be already turning this off and say, we don't know what we're talking about, because right now being a trader in a bull market makes everybody look like a genius. Back to Warren Buffett, he said that, a rising tide raises all boats. But when the tide comes out, you see who's swimming naked. And so you might have jumped into crypto 6 months ago and you've been trading and you think you're a genius. But have you done it through 2018 and 19 and 20 and so forth? So for me, I always look at things like health and business and work and relationships as long-term pursuits. And so I also look at my wealth as a long-term pursuit. And so I think, like with diet, for example, people always want to argue over what's the best diet. I think what's the best diet, but it's for me. And I believe it's something that I can sustain over a long period of time. That's the best. So I can go on this binge diet, for example, like I've gone straight keto, and I've done that for 90 days. But like, I can't sustain that over the rest of my life. And so I've loosened it up a little bit, for example. And the same with like that trading lifestyle. I just don't think that it's something that could be sustained over 20, 30-year life cycle.
Yeah. I mean, this is coming from somebody that I'm a millennial, I'm younger, and it's a big trend right now. I went down that path. I started with that path. And trading was supposed to be my dream, my life. It was supposed to be my career. And one thing led to the next. And now, from trading, I was creating content around trading. And from that content created a brand. And that brand created a little bit of cash flow. And now that's my source. That's where I'm generating my wealth. And from there, I park it elsewhere. Like you said, I'm going from 1 to 2. Before I was trying to do 2 to 1. Doesn't work that way.
What I would also, so back to the question, back to Stuart's question, he did ask at the end, like with all the volatility, which method and means would you go about choosing? So what I would add to that is that, trading can be fun. Trading can be profitable. What I would recommend is that if you want to do that, do it. Always chase your interest, but do it first. Like I said, understand what you're doing. Two, build a system to protect you. So what I might do is take 100% of my money and then divide that up, right? I said first rule of risk management is allocations. So some goes into stocks. So maybe I take, or let's just talk about crypto. So maybe I take 80% of that and 90% of it, and I put it into Bitcoin. And then I take 10 or 20%, and that's my moonshots. I'm going for the moon and I'm gambling away and I'm having a great time, but I'm not risking 100% of my wealth. I'm only risking a smaller piece of what I'm okay risking. So I think, if you did want to do it, I don't go to Vegas often. I used to go quite a bit, but even when I did, I didn't really like gambling that much. But I would take a couple $100 and I'd be like, okay, I'm going to go sit down and there's a couple $100 and this is all I'm going to do. And,
Yeah.
and I would just play.
Yeah, that's a pretty good analogy.